The conversation most recently has been shifting to how long does the Bank of Canada need to hold interest rates at this level in order to get inflation all the way down to its target of 2%. It's at 2.9%. It's getting there. But the expectation is that it's going to still take some time to get to that 2% target. So the governor there is saying that it is too soon to talk about lowering rates at this point. Now, the CBC's Scott Peterson has been listening in to this press conference as well as economist Armin Yalnizyan. Armin, we're going to come to you in a second, but I just want to start with Scott here. What jumped out to you from what Tiff Macklem had to say?
Well, it seemed to be unusually strong language. Usually the Bank of Canada governor sort of, plays both sides of the field here, but he pointed out that he was worried about the persistence of high inflation, going to be in the neighborhood of about 3%, 2.9 as you said, and it was going to remain until the middle of the year, and maybe it would come down to about 2%. And also pointing out really the volatile figures here. Gasoline prices would be volatile. High shelter costs, the biggest contributor to inflation, would remain a problem going forward, and just the general persistence of inflation as well. And the plain language here is that basically the bank wants to keep rates higher than anticipated, longer than anticipated. And the danger is, of course, is if they lower it too quickly, that would make people spend again, which would set off potentially another cycle of inflation, which would be the worst case scenario here. So the strong language as well, confirmed by currency traders out there. The Canadian dollar up about 1/3 of a cent after this 9:45 announcement, at really the strength of how much they were looking at inflation. And so far, the good news is the economy has avoided a recession, but the bad news, rates are going to be higher than longer. And now currency traders, or I should say market makers, they had originally thought that we would see an April rate reduction. That doesn't look to be the case. Tiff Macklem basically said that in concrete language. So more market makers are thinking now, the majority, that we're going to see a June rate decrease, and that could be the beginning of a cycle of lower rates.
Okay, Scott, thanks so much for breaking that down for us. That was the CBC's Scott Peterson. Let's bring in Armin now. Armin Yalnizyan, she's an economist and the Atkinson Fellow on the Future of Workers. Armin, thanks so much for jumping on with us.
My pleasure.
So no change today when it comes to the rate decision, and not really much of a change either on the language around where they're at right now. Still trying to wait things out to see just how long interest rates need to stay at these levels in order to get to that point where they might be able to start cutting interest rates. What were your big takeaways, Armin?
I was actually surprised that the Bank of Canada Governor Tiff Macklem said out loud again that what they're really looking for is softness in wage growth. That wage growth has been in the 4 to 5% annual year-over-year growth range for a while now, for about 11 months. And just about 2 months ago, the average wage caught up with inflation. And we still have a lot of collective agreements going forward that will be trying to catch up with what has happened in the last few years, because they're multi-year collective agreements. So the idea of that, they've got in their crosshairs wage softening is a problem, because then later on he says explicitly to a question posed by the Canadian press that yes, the biggest contributor to inflation right now is shelter costs. And guess who causes that? The Bank of Canada's interest rates. The whole, I wouldn't want to be a central banker right now, because the tightrope they are walking is to cool demand when the problem has been significantly about supply. They have done nothing. Rising rates do nothing about gas prices, which he pointed to, food prices, which are moderating but are still way elevated over headline numbers. Nobody understands exactly why they're taking so long to come down. And then the last part of it is shelter. And by raising rates, you cool demand, but you also cool supply. And that's the issue here, is there's not enough supply.
Well, yeah, I mean, and the Bank of Canada has to be looking through that in its measures to get a sense of what's really happening when you're not taking into consideration those higher mortgage costs that Canadians are dealing with as a result of these higher interest rates. So what is your sense, Armin, of what this next year or so is going to feel like for Canadians if we're at this point where interest rates are still at 5%, they're still elevated, we don't know when they're coming down, and inflation is still elevated? How do you see things playing out? Do you think that the economy is in for a hard landing here? Is there a possibility of a soft landing, that we could avoid a recession?
I don't know how to answer that because there's so many wild cards in the mix now. You
Yeah.
know that this world is increasingly conflict ridden, and we haven't seen the impact of what's happened in the Suez Canal because of conflict and what's happening in the Panama Canal because of climate change on goods transportation. But we do know that prices are going to go up again like they did during the pandemic, Ukraine conflict, period, the war in Ukraine, period. So we know that prices are going to go up again. We just don't know when that's going to happen. And, so I don't know when that's going to hit, how bad that's going to hit. We consume more services than we consume goods.
Yeah.
So it's unclear to me that the wash outside of housing is going to make much of a difference.
Armin, so sorry we have to cut it short today, but really appreciate you joining us. That was Armin Yalnizyan, an economist and the Atkinson Fellow on the future of workers. You are watching CBC News Network.